Hey, what's going on, everybody? Welcome to another episode of the Rapid Review. My name is Bobby, and this is a short week, but it felt a lot longer than it really was. It's been a real chop fest lately, but we're going to do everything to go over what went on in the overall market, look at a couple stocks, some industry groups, and we'll get ready for everybody to trade another week. All right, let's get started. All right, so everybody on X and on YouTube, feel free to comment if there's something you agree with, disagree with, questions you have. Also, if there's a stock you want me to take a look at, just throw it in the chat. I got a couple that we're going to look at later, a couple from Discord. So appreciate you people, and yeah, let's get started. Obviously, here's the disclaimer: informational purposes only. This is not financial advice, educational purposes. All right, current state of the market. We are in uptrend and we are still in a power trend. In terms of distribution days, this week we're sitting at 7 distribution days on the S&P, 6 distribution days on the NASDAQ. So I've been highlighting this every single week. On the August 11th, I am personally showing that as a distribution day. If you're somebody who follows IBD, reads the big picture, you are not showing that as distribution day. You're showing 6 and 6. The reason I show the August 11th day as distribution day, it was very close. Some volume sources said yes, some volume sources said no. I decided to err to the cautious side and say yes. So that's why you see that highlighted there. Other than that, in terms of distribution, the S&P gained a distribution day on Tuesday, which is the 2nd, and also on Friday, which was the 5th. And that brought us to the count we're currently at because we lost the distribution day. We lost the 29th and the 31st of July's days. Those are both due to time, 25 days of trading, no longer a valid distribution day in terms of the count. Going over, though, to the NASDAQ. So on the NASDAQ, we had also lost the 8.5 distribution day due to time. I'm sorry, not the 8.5 distribution day. We had also lost I believe it was a 731 due to time. And then in terms of add-ons, we gained the September 5th day. This was actually not a distribution day, though. This was a stalling day. And we'll take a look at the charts later, and we'll see how that kind of stalling actually plays into what's going on with the overall index. Other than that, oh, we also gained a distribution day on Tuesday as well. Sorry, it's Tuesday, Friday, distribution day Tuesday, stalling day on Friday, and then we lost the 31st due to time. Next week, we will likely be only dropping one day. We will see this August 5th day drop off due to time. Other than that, we'd have to see a pretty significant move within the indexes to see any of these days drop off. We'd be looking for a 5% move from the close of any of these distribution days. And as you can see where they're sitting right now, that would have to be a significant move. So expecting that it was just going to be the one day we drop off, and hopefully we don't gain any more. All right, looking at the current state of the market in terms of how the week did, the S&P was up 0.33%. NASDAQ led out the week up 1.14%. And the Dow, laggard for the week, down 0.32%, which leads us for the year at the S&P up 10.2%, NASDAQ up 12.37%, and the Dow up 6.71%. So S&P was starting to kind of catch up in terms of the year, and the NASDAQ, having a big week this week kind of made a bigger gap again. So NASDAQ leading out the year. And the moving averages. The S&P and the NASDAQ are still sitting healthy. They're still above the 10, the 21, the 50, and the 200. They're all sitting in their proper order. We'll talk a little bit about the kind of back and forth that we had with the 10 and the 21. But other than that, with the Dow just dipped below the 10-day, and the Russell also sitting properly. Russell definitely showing a ton of strength. Small caps looking good. And we'll take a quick look at that chart as well. All right, so with that being said, let's jump over and take a look at the indexes. As we always do, we will start off with the NASDAQ on the daily. Look, here's one thing I do want to say. There's always going to be some news. Every single week, pretty much, we have some sort of news, something going on. And I'm aware of these potential catalysts. You talk about rate cuts, you talk about tariffs, Fed meetings, Earnings, even within each company, is obviously tailored to news, but these do not dictate my actions. I am very aware that these could be volatile events, and then I take those into consideration in terms of my risk, but I do not try to predict. I do not try to say, well, if this is going to happen, this is going to result in XYZ happening in the market. All I do is see how the market reacts to those news events and follow the price action. I just wanted to say that because there obviously, especially this year, there's been a lot of stuff tied to the news going on with the market. And as much as I'm aware of these events, it has not dictated a single one of my trades. All it has is when we have certain Fed events, maybe I'll be a little more cautious knowing maybe we're at a pivotal point in the market. Wanted to just get that out there and make sure I kind of reiterated that. All right. Daily, let's take a look. So this was just another range bound week. Be talking about this choppy action. Everybody's been talking about this choppy action. When you look at the end of last week, because right, we only had 4 days here. This is a short week. We were closed on Monday in the U.S. for Labor Day. Looked like we pulled back, but it looked like we found that support at the 10 and the 21 day. And from here, it was kind of like, all right, which way we're going to break? We can either break up, we can either break down, we can stay range bound. But overall, it was just good to see that kind of support happen. Though on Tuesday, market opened up and gapped down very, very deep. It was not a fun day on Tuesday to see where we opened. But in this typical markets fashion, a lot of those gains ended up getting losses ended up getting erased, and the market kind of rallied. Still below the 10, the 21, but it looked like we were kind of creating what was a higher low, possibly based on how we closed on that day. Again, we had higher volume, so it showed that the selling had come in and created some distribution. Then the rest of the week, we ended up gapping up on Wednesday. We got back above the 10 to 21. We kind of climbed a little bit higher on Thursday. And then Friday was this stalling action. We had a really, really strong start. And again, in this typical market fashion, how we open out in the morning did not hold up through the rest of the day. That's both on the upside and the downside. We've been seeing this. So we opened up at all-time highs, and then we kind of reversed. Intraday, we pulled all the way into the 10-day simple moving average, and then we kind of closed pretty much flat for the day. But being that we were really, really up to those all-time highs, volume came in, and then we just kind of reversed. That was some stalling action that we got there. All right, so the other big thing that I wanted to really mention was volume. So the two up days that we had over here were done on lower volume. When you look at what we had from not only this week, but also a couple of days going into last week. So volume was definitely higher on the downside in terms of the daily. So keep that in mind. Those up days were definitely done on lower volume. Other than that, it is exactly what I said. We've been kind of range bound. We've been stuck in that sideways choppy action basically for the last 4 weeks, which is not a positive sign. What's going on, Chad? Chad over from the Discord group. Appreciate you joining. Appreciate the little yo. But yeah, we've been going sideways for basically the past 4 weeks, and we've just been range bound in this area. So there's some positives and there's some negatives, right? Negatives being that we're just range bound. Negative that we got hit over here and reversed lower. Negative that the volume isn't as strong on the upside. Positives, though, that we're creating higher lows. Positives that we continue to fight our way and get back above the 10 to 21 simple. And positive that that's the 10 simple 21 EMA. And positive that we haven't even really pulled into the 50-day. It seems very resilient. Anytime we get close, it's like there's a force field there, and we just continue to bounce back up from there. So there's a lot of positives. There's a lot of negatives. There's a lot of rotation that's coming into this market, which I think is making those kind of mixed signals because we have some things that are doing well, some things that are doing poorly. So, yeah. That's kind of what went on this week. Let's look at the weekly. Again, you could see the big gap down. We came into the 10-week moving average, and then we found support and closed just off all-time highs in the higher range. The week volume, I'm not really too concerned about because, again, this was a short week, so kind of disregarding that as a low volume. But you really saw what we saw on the daily. All right, so key levels on the upside, it's pretty simple. All-time highs, this has been a key area of resistance here, and then now over here where we're just trying to fight to get above that August 13th high. So key level there for the upside. Really want to see us break that, similar to a stock breaking out, before we see that maybe next rally continue. On the downside, the 10 and the 21, look, we've seen we can kind of fluctuate back and forth through that, still keeping an eye on it, but not too concerned if we do break below that. It just could be just more chop occurring. But the next level would then be the September 2nd low, which was that last low that we had this week. The 50-day, those two areas right there coinciding very closely, so keeping an eye on those. And then you also have the August 20th low. So really, I think right now in order, you're going 50, you're going Tuesday, and then you're going last Wednesday in terms of, or actually it's a couple Wednesdays ago, the 20th, in terms of what we're looking at the downside. Every single one of these areas that we find support, it's going to be positive action. Every single one that we break is going to be negative action, unless it's to the upside. All right, we'll look at the S&P quickly, but to be completely and utterly honest, it is pretty much identical, pretty much the same action. Nothing really more to say as to what's going on here. I did say we'll click quickly on the Russell, and this has been showing strength. This has been trending up nicely. You can see that we continually have these higher lows, and we're just trending and trending and trending, making these all-time highs, moving averages, everything looking really nice. So this has definitely shown some strength with those small caps. So positive to see that there. Other than that, that is all we have for the indexes. So let's jump over and let's take a look at Deepvue. For those you don't know, I am a Deepvue partner. This is the application I use for all my watch lists, my screening, fundamental data. Everything I do is through Deepvue. Super stoked to be working with them. Application is just next level. They're constantly making updates. They are bringing an update to this theme tracker, which I'm really excited about, and will hopefully use every single week. But you're going to eventually be able to click on these and see all the stocks that fall into these themes. So if you are interested in checking them out, I have a link in YouTube. It's going to be in the description. On X, it's going to be in my profile, and that's my affiliate link. You can check it out. Right now, they're on a wait list, so at least throw your name in the hat, and this way, when your number gets called, you have the option to sign up. Looking, though, at this theme tracker, looking really more on the weekly, miners, they just can't be beat. Gold miners and silver miners have been leading out this year like next level. They have created such a big gap. I'd be surprised if anything could catch up to them this year, the way that they've been trending. The 1 week, the 1 month, the year to date, just really outperforming everybody. Other than that, though, you have solar has been the big talk, right? Probably a couple weeks, maybe in a month ago, we were talking about solar was showing some strength in the short term, but was still kind of like starting to make that bottom turn off of a downtrend. Wasn't sure if it was just a little, maybe a rally before it just continued lower. And it's actually now sustained a pretty good uptrend. So solar is definitely one of those groups to be keeping an eye on. Biotechs, anything in that pharmaceuticals, those have been doing very well as well. You can see that they did well this week, and they've been doing well on the monthly side as well. Maybe a genomics over here. What else? And home construction. That's another, but really in construction in general, to be honest, has been showing some good strength too. We've been seeing that every single week. It's carrying over to the 1 month time frame as well. And like I said, solar, we're starting to see these climb up. Casinos was another one that was doing very well. This week did not. But we had seen that do very well over the past couple weeks, but this week was just not one of those. And cybersecurity. Cybersecurity is another one of those industries that we're seeing it kind of perk up over here. On this side, still trying to climb up on the 1 month ranked and kind of ways down. I didn't see it over here. And it's kind of in the middle tier on the year to date. So what we're just trying to do is just see what we're seeing consistently. Like I said, solar, the pharmaceutical area, construction, we're seeing that consistent strength over on the weekly basis, and it's just going to hopefully be a longer term uptrend. The same way you see with the stock, when things start turning around, you want to see that sustained uptrend. And then when you see that sustained uptrend, look for the opportunities to get into that. So same thing with the industries. All right. So let's talk exposure levels. This is one of those tough markets, right? This is obviously, I would say, being that we're talking about chop and everything like this, This is the hardest market for trend traders, for trend following traders. Clean uptrend, easy money, right? You pretty much buy anything that's in the leading growth stocks in those big uptrends. For the most part, you're going to make money. In a downtrend, also fairly easy. You're basically just sitting in cash for a lot of us and just waiting patiently, keeping an update on your watch list and things like that so that when the market turns around, you're ready to execute. Pretty easy. You're basically preserving your capital while everybody else is panicking. But right now, we're in the chop fest. And this can be very, very difficult. It almost becomes like a mental battle, especially where we're at right now. You don't want to sit out because if this market does break to the upside, we could be seeing another sustained uptrend. But you also don't want to be overexposed because if we do break down, then you're going to just see your equity completely fall over. And you don't want to overtrade because if you're continuing to overtrade, you're continuing to take these losses, you're continuing to try to get into certain stocks, but things are rotating, getting chopped up. You're going to basically hemorrhage all your capital via death by 1,000 cuts, essentially. So how do we balance this at the point that we're in right now? The first thing I'm going to say is exposure levels in this type of market, I think, are going to be very dependent on how your performance has been. If you have been performing very well, the stocks that you have are holding up fine and showing no reason to sell, and your portfolio is growing, there is a good chance that you're going to be very highly invested. If you are getting stopped out of a lot of your stocks, if you are finding that a lot of the trades that you have placed are not working, maybe you're focusing on the wrong industry group, maybe it's just the way things are panning out right now, you're likely finding yourself on the opposite end of the spectrum. Very, very little exposure into this market. So the way I look at this, I like to look at this very similar to how I look when the market is turning around off of an overall correction. I am keeping, in terms of my new buys, let's say that. So my new buys, earlier in that uptrend, I'm going to be acting very, very same as I am now. I'm taking very small positions, which are allowing me to get pulled into the market. But if that uptrend or this choppiness doesn't break to the upside, I'm not too exposed to this market. So I'm giving myself a chance to kind of play in the market, but not overexposed and add too much risk given the environment that we're in. The other thing that I'm doing is I'm being very, very selective. I am focusing on where that money seems to be rotating, which is why we're looking at a lot of these industry groups. I'm ignoring what might have been the past leaders that are a lot of them forming bases and maybe not really breaking out because I'm seeing the money going into these other industry groups. That is how I'm looking at my new buys. On my current positions, if they're holding up, if they're acting healthy, I'm just constantly making sure my stops are in sound places, especially at certain technical levels that these stocks should be trending, should be holding. And basically, I am just sitting back and letting the stock dictate if it's going to stay in my portfolio or I'm going to get stopped out of it. It is very, very difficult for a lot of us, but this is very much a sit on my hands type of market as much as possible. Unless things are so drawing me in where I feel like this is a very good setup, I'm trying my best to just sit back as much as possible. And if I do take a position, it's very, very small positions. With that being said, I am almost 100% invested. A lot of my trades that I had prior to this are holding up. Nothing's really, only a few things have stopped me out. So I will lead with that caveat, but I also understand that a lot of my stops are very, very tight on those stocks. So if we are to roll over, I'll get stopped out. But a lot of those are just kind of going to be taking profits in some of those trades. All right. Let's get started looking at some stocks. So the first two I wanted to bring up was AppLovin, which I do own a position in, getting added to the S&P. So that jumped up. This was one of those stocks I believe we spoke about last week that we kind of had this cut pattern, maybe a little like 1 week kind of handle. It broke out, it squatted, it retraced, and then it rebroke out again. And then Friday was not fun. Like this was the worst performer in my portfolio on Friday. But again, like this didn't even come near any of my stops. So I got held in and then we gapped up about 6 something percent on Friday with the news that it's going to get added to the S&P. So if you have this one and you didn't notice, definitely look, because after hours you had a nice little pop. And you also had the same with Hood. I used to own this. I do not own this. I was stopped out on this one going back to, stopped out on August 1st. So yeah, this one also had the same interaction. Getting it to the S&P took about a 6 point something percent jump. So cool to see that there. And I just figured I'd highlight that. The interesting one about this, and a lot of people on X have talked about, it's almost like they're like, let's make this look as crappy as possible. Let's make this look like it's about to roll over. Let's really rough people up before this news comes out so we can wash out as many people as possible. That's pretty much what it looked like. But next one we're looking at is A-Lab. This is a stock that I was watching way back here. I ended up taking Credo instead of it because they were very, very similar. And it went on a really strong run. This has moved, let's just say even from this breakout, almost 100%, and now has flagged out. So I've really been watching this one. It's definitely respecting that 21. Oh, Chad, good call. I'm so glad you just said that. I do this. I've done this a couple times. All right. Luckily, App and Hood, I'm just telling you guys that they gapped up. Nothing really to add there. So, Chad, thank you for letting me know that I'm not sharing my screen. All right. Let's go to A-Lab. All right. So A-Lab, like I was talking about, I was watching this one way back over here as I was watching Credo. And I ended up taking a position in Credo, made a little bit in that, and then was stopped out. I'll emotionally stop myself out. Then this has kind of gone on a huge run. This has, from the breakout point, gone up about 100% and now is starting to flag out. It is riding that 21 pretty good all the way from back here. So I've really been watching this one. We saw the volume kind of start to cave in over here, but then we saw a little bit of peak in the back end of this flag. And basically with how, let's just do this. We had the pullback, rallied up, pullback. I was looking at this kind of flag area, and it was pretty cool to see that on Thursday, we actually stopped right at that trend line. On Friday, we broke above that trend line. I was very tempted to take this at the open, but given that this market has been acting the way that it has been, I've been a little bit more patient. This had kind of chopped around, and I put a position, small position on here. This was kind of, for me, more of an early entry and possibly building a bigger position. One of the things that I do a lot of is some breakout trading. So I am keeping an eye on this all-time high over here. Really would be nice if we can tighten up right around those all-time highs. And then I can maybe add to this position. Hopefully the market starts acting well. Time will tell. Got a small position. My stop is a break below this 21 day. That's where I'm keeping my stop. And other than that, everything else in this stock looks great. The fundamentals look good. The story behind this one's great. So keeping an eye on this one for a possible add-on. Do currently own a position. MU, do not own this one, but this is one that I have been watching. When you look at things on the weekly, well, first, the fundamentals are really strong on this one. This is one of these stocks that, for anybody that trades growth stocks, we've been seeing this for years now. It's had its kind of time in the limelight. It's had its time where nobody wants to touch this thing with a 10-foot pole. Right now, it does look like it is perking up to hopefully have a breakout. We had this kind of cup pattern form here, handle kind of come in, and then we broke out last week or this week, however you want to look at it, closing near the highs, breaking that handle kind of area. Volume low, but again, remember that this week was a short week. So take that into consideration. But when you go in on the daily, you can see that breakout was on high above average volume. This one, what I really liked about it was within that handle, you got a lot of those moving average condensing. Some people might have even taken the trade on Thursday as an earlier entry or more of a swing trade with how we had this bounce off of all those moving averages. And then we also took out that little pop right here, that prior high. So that could have been a good area that I know some people might have taken that trade. But right now you are broke out here. For the traditional CANSLIM traders, just so you guys can see this, if you're like, well, I'm willing to go up to 5% from that pivot, we'll just give you a roundabout idea. All right, that's 510. So you could see just kind of about where that high range is, looking at somewhere around, where are we at with this? 135 probably being like the peak of that pivot. So this is still actionable, especially for you traditional CANSLIM traders buying out of those big traditional bases. So keep an eye on that. And again, if anybody watching, if you guys have a stock they want to look at, just feel free to shout it out or write in the chat. All right, Reddit. Been really watching this one. I had a position way back here. I was stopped out, and this thing took off without me. Made a massive move. It has pulled back into that 21 EMA. It completely just acted as you'd want it to see, riding that 21 EMA. The volume, that was the other thing. The big thing with this one, the volume just really drying up right around here. So seeing that all these people that were buying in this uptrend, doesn't look like they're getting out. You know, we had a little, the pullback was a little more higher volume, but then here it's just drying out. It had been difficult you had these gap ups and pullbacks, gap ups and pullbacks, but things now are starting to look a little bit better. We broke this trend line on Friday. This could have definitely been an opportunity to add or start a position here. But I am also taking an idea of looking at how we act in here. Can this give me maybe another tight area to enter and add more to my position? Or am I going to have to add in like a cup breakout over here? Yeah. So other than that, this is one of the stocks I own. This is a stock that I am really watching to hopefully build a bigger position in. We'll jump over to AVDL. And this is shout out to Discord for asking for this one. So fundamental, let's look at this. Earnings look great. Sales look great. Institutional sponsorship looks overall pretty good. A little sideways over the last year, but overall looks fairly good. ROE looks great. Subgroup showing not that great, but we also know as of recently that this kind of the pharmaceuticals, the biotechs, everything's been performing a little bit better. And you can even see from the rating side of here that like the fundamentals are really strong here. The last 3 to 1 months, that absolute strength is looking really strong. The 12-month time frame, not so good, but as of recently looking a lot stronger, which is positive. We can see that in the RS line perking up. Looking at this on a weekly, we can see that this had kind of a really choppy uptrend. It rolled over in the kind of early stages of last year and was just in this big downtrend. Then right around when the market turned around, this started turning around and started this uptrend. So let's look at things on a daily. This is here, that giant cup pattern that we've kind of formed. And then you can see here, it's like right as we got towards kind of like this even high, this peak, this area over here where there's just a lot of resistance. Right as we got closer to there, it's kind of tightened up. So I like the idea that this has tightened up a little bit right at those highs. We kind of dipped below the 10, but didn't even come into the 21. It's created this kind of little cup-like pattern that you could have argued if somebody wanted to buy off this little cup on Friday. For me personally, this is just a really big correction. I would like to see a little bit more of a base kind of pattern forming in here. I could see more swing trade styles wanting to kind of enter here. For me personally, though, I'm probably not going to. I also have a problem with the pharmaceuticals and biotechs. That those are always rough for me because you get the news like this, and then you get days where this thing just gets annihilated. So unless it's a perfect setup, and I really know a lot about the kind of whatever drug or whatever that they are selling, I'm always hesitant with these. So I'll lead with that. But I see what you're looking at. And if it does fit the type of trading style that you trade and the setup that you trade is in this pattern, then I would say go for it. Obviously, consider what's going on in the market and know where your risk is. Last one I want to mention is comfort systems. At first glances, everybody talks about this one. They're like, okay, so this, you do some research. It's basically like I guess you would say like a cooling AC type of company, but this is basically an AI and a data center play. That's where they participate in kind of cooling those data centers. This has gone on a really, really big run. We've gone from this bottom right here over 100%, and now it's kind of flagged out right there. So been really, really watching this one. It has gone sideways, and it is from peak to trough. We're looking at about a 10%, a little over a 10% drop. So this is pretty much what you would call, in my opinion, a textbook power play setup, a textbook high type flag, as you have this big, big uptrend and then this really, really tight action with really, really tight closes. I am looking at a breakout to all-time highs on this. And it just seems like every single time this wants to kind of get there, it kind of retracts. Wants to get there, kind of retracts. So still keeping an eye on this. We've seen, like, if you look, like ALAB was this, right? This sideways chop. Reddit was this run up and then sideways chop. There's a lot of stocks who have acted like this year, that everyone had this really, really tight sideways action and then had big, big run-ups. So really, really keeping an eye on it, because this pattern, Life is another one that I also own. That's another stock, oops, that's had that sideways action right through here, and then has kind of, this one not as explosive, right? It's kind of just stair-stepped its way up and kind of trended nicely, which I don't mind. I'm very happy with how this is acting because it's not giving me too much of a headache. But with that being said, these are patterns that we've seen with the tightness really, really work out. At the same, we've also seen, oops, gotta change my tool. Sorry about that. You have AS, Amber Sports. I was watching this for a while. I bought right in here, right? I thought this was all right. Here we go. Last little shakeout, bounces off all these tightly coiled moving averages, and it completely rolled over. And I got stopped out of this one. So not every trade is going to work, but we have seen some of these setups work. Some haven't. Needless to say, we know that company, the fundamentals and everything are looking good. And the pattern is something that I think is worth watching. All right. That is all I have in terms of stocks. So final thoughts, just end this one out. Do not try to predict where this market is going to go. I think one of the most popular polls that people are running on X are we due for a correction? Are we going to rally? Like, where are we going from this kind of range bound area that we're in here? And the truth of the matter is, nobody knows. Nobody knows. News can pop up tomorrow. News can pop up next week. That could push the market in either direction. No news could happen and the market can just go in either direction. So things are so dynamic. They're changing constantly. All we know is we're in this range-bound area. We're in this chop fest. And until we break to either side, we're likely going to be continuing to experience that. But with that said, we are still in an uptrend. Yeah, we have, like we said, we're above all the moving averages. Things are choppy, but trending upwards. So until that changes, we're in an uptrend. I'm just being a little bit more cautious given the choppy environment that we're in, and I'm really being very picky on the new trades and making those new trades smaller because the environment isn't as easy. The big thing in these environments, you need to preserve your mental capital, because if we do go on a big run, and let's just say we go on another 2-3 month rally, which I don't think is entirely likely probability-wise, but let's just say we do. If your mental capital is just spent, if you are beaten down, exhausted, and you're like walking up to that starting line of this next rally and you're injured and just falling apart, like you're not going to have a good run. You're going to have a really rough time. You're going to probably find yourself making some bad mental decisions because of some of the things that you've done in this market. So preserve that mental capital. Things will either get easier in terms of you're going to be making money, or easier that you just know this is a market to step aside because we're correcting and you're going to be sitting in cash. That is the last thing I'll say for this, because I think that's what kills people the most. It's done to me. I had a 40% drawdown once in a choppy market, and it sucked. And it took me a while to mentally recover from the fact that I just slowly hemorrhaged my equity. And I've learned my lesson from there, and that's why I'm kind of acting the way I am as right now. But that's all we got this week. I appreciate everybody joining, everybody that is on X, everybody that is on YouTube. If you are on one of those platforms, you could always check out the other platform. And they are on the screen. Link in Discord, like I mentioned, we had some of those stocks coming over from Discord, so I appreciate that community. We're coming up on almost 1,100 members. Every single day, people talking about growth stock trading, CANSLIM, swing trading, styles like Minervini, Oliver Kell, Bill O'Neill, you name it. Any of those kind of people falling into that category. And people all the way up from professional traders to people that have just opened their trading account in the last couple of days. So super big shout out to that group, and I appreciate everybody there. Email, if you want to send me an email, feel free. And other than that, that's it. I try to do this every single week. We've been consistently doing this every single week. So if you're watching, I look forward to seeing you guys next week. Other than that, stay disciplined and have a good rest of the weekend.